Stock splits are great because we get more shares of stock, but another really, really great thing is stock buybacks or repurchases. If you hear a company you've invested in, you already own the stock, and they say, we're going to have a buyback of X millions of dollars, to a stock buyback or stock repurchase program, celebrate, yay, that means good things for your stock, and we're going to find out here in this lesson why this is great for you. So basically what a stock buyback or repurchase is the company is buying its own stock back, right? So they, years and years ago, maybe hundreds of years ago, they had initial public offering and they released all these shares of stock at an initial public offering price and people bought them. And once that initial public offering happened, well, then the stock is traded on exchange and it could go up in value, it could go down in value. When a company buys its own shares back, it's basically buying shares off the market and then putting it into its own company, or they own the shares basically. It's part of the company valuation. So those shares aren't, publicly traded anymore. So they're buying those shares back, which basically takes out shares out of the market, which is a good thing. Less shares in the overall market is good for you who own shares already. So why are companies doing this? Why bother buying their own stock back? Why don't they put money into equipment or hire more people or expand their operations or do a merger or an acquisition? I mean, they could do all these things, but one of their strategies might be buying their stock back. And a reason for doing that is they think their company is undervalued. Actually, they think it's really undervalued is what they're thinking. They're seeing their stock price. They know their price to book. They know what their future looks like. They're the insiders. They know all this stuff. And they're looking at it and they're like, what is going on in the market? Maybe the whole market is down. Or what's going on with our stock? Why are we not getting the love we deserve as a stock? We're a great company. So we see this as companies really undervalued in terms of stock. So what a great buying opportunity. We know it's going to be good in the future, in the long term. So why don't we buy our own stock back at this low price, and then we'll be kind of recapturing those dollars. And maybe you may think the same way on a stock that's gone down. That's part of value investing or buying some underperforming type stocks. So they're kind of doing the same thing. So when they do this, it's good for you. They're not necessarily buying your stock, but what happens, it's good for you because what happens in the market. First off, market is all about buying and selling, right? You can't buy a stock until you have a seller of the stock. And if there's more buyers than sellers, well, then that's going to drive the stock price up, right? That's that supply and demand. Now, when you have stock buybacks or purchases, you have a very established, well-funded buyer in the market being very active, and that's the company buying back its own stock. So think about that. You don't have to worry about all small investors and things, who's going to buy my stock. It's like big companies out there, their own companies buying it anytime they can get when they start seeing maybe fluctuations and buying, in their view, buying low. So you have an established buyer in the market who has publicly said we're buying this stock. They publicly say this. They need to publicly say this, and then they, at a certain point, and they continue to buy the stock. It's also a signal to the market. The company has come out and said, we think our stock is undervalued. This is crazy. We're going to buy our own stock because we think buying our own stock is a better investment than investing in capital or people or expansion or any of that stuff. Our price is so low, we got to buy our own stock back and capture that low price. So it's a signal to the market like, hey, if the company thinks the stock's low, maybe there's something to this. Maybe the growth prospects are really great. And besides, it's going to drive the stock price up anyways, typically. So we might want to pile in now, along with the company, to buy that stock. So it helps drive the existing stockholders' price of their shares up. So stock buybacks are great because your value increases, right? You have more shares in comparison to others. There's less dilution is what that means. So you have more shares than you had before in comparison. You still have the same amount of shares. If I had 100 shares out of, let's say, 100,000 shares total, I still have that percentage. But if now instead of 100,000 shares, there's 50,000 shares total, and I have 100 of them, well, my value of my existing shares are less diluted. They're more valuable. Particularly when you look at things like dividends, if they're going to pay out a certain dollar amount in dividends, well, that dividends doesn't have to be shared amongst 100,000 shares in that example. Those dividends are now the same dollar amount or same currency amount now shared among the 50,000 people, and I have a bigger chunk of that 50,000 in comparison. So my dividends might be bigger along the way too. So there's lots of good stuff that can happen with stock buyback. So whenever a company announces a stock buyback, usually its stock that day will rise a little bit too. You can watch it. It may or may not, there might be other things in the market, but if you see that, that's a really good sign and a really good news for you that when a company is buying back or repurchasing its own stock.